3 most powerful candlestick patterns that I have ever found in my own trading. And after that, we're diving into the really cool stuff. In number 4, I'm going to be showing you guys how to trade with the trend using candlestick patterns, and I'm going to give you a full strategy that I've never taught before. In lesson number 5, we're going to talk about price action patterns. We're going to talk about how to combine a number of different candles in order to point out and predict market reversals using price action patterns. In lesson number 6, we're going to talk about what I call CEST, how to put everything together that you've learned so far in order to build a full and profitable trading strategy. And then lesson number 7 is just going to be a recap. So with that said, let's go ahead and get started with number 1. What are candlesticks? The dollar yen, and we're on a 4-hour chart of that dollar yen. Now, each of these candlesticks, what they actually are, that first question we have, which is what are candlesticks? They are a representation of price movement during a certain period of time. With us being on the dollar yen 4-hour chart, that means each of these represents 4 hours of price movement on, you guessed it, the dollar against the yen, because that's the asset we're looking at. So what these candlesticks show us, moving on to question number 2, what candlesticks show us is the open, high, low, and close of that 4-hour period. So each of these candles, if I zoom in here, represents and shows us during a 4-hour period where that candle opened, the highest point that candle got to, the lowest point that candle got to, and the close of that 4-hour period after 4 hours passed. So that's what a candlestick shows us. And the way we use candlesticks, if I zoom out a bit, is to determine the trend of a market, is to determine areas of value we can trade in, and even to determine entries based on candlestick patterns we're going to discuss a little later in the course. They can also help us determine when we should exit trades. All things we're going to dive into right now, starting with how do we read candlesticks, what is the psychology of a candlestick, and how we can use the size of the wicks and the bodies to help us determine what's likely to happen next on a particular asset like the dollar yen. So with that said, let's move on now to how to read candlesticks that you're on. I'm sure you've all heard of time frames, right? The daily chart, the 1-hour chart, the 5-minute chart. Depending on what time frame you're on, that's the amount of price movement these candles represent. So let's consider that we are on a 5-minute chart. That means that each of these candlesticks would represent 5 minutes of price movement. Now, before I get ahead of myself, candles have 2 parts. Candlesticks have a body, which you can see here, colored in green, and a wick, which are the lines above and below the body of the candle. A green candle represents a 5-minute period, since we're on a 5-minute chart, right? A 5-minute period where price went up or closed above where it opened. We're going over that in just a second. A red candle has a body as well, but the body of this candle is red because it represents a 5-minute period where price closed below or went lower during that 5 minutes. To make this really simple, let me go ahead and explain the open, high, low, and close. The open of a candle is where it opened during that 5-minute period. So let's say that the beginning of our candle is at 12 o'clock. What this candle would represent is the open of a candle at 12 o'clock. The low would be the lowest point price got to during a 5-minute period. The high would be the highest point price got to during a 5-minute period, and our close would happen at 12:05, and that would be the ending price during a 5-minute period. So that is a green candle. A red candle represents when price went down during that period of time. So for a red candle, we would have an open at the top of the body. This